Hey, it's DJ from PTA. Want to go over AERC. This trade in particular, this video in particular is probably going to be one of my longer videos. More so because I want to combine a few things to this so that you can kind of understand what was going on, how to play it, and just kind of get an idea of how everything kind of played out in actuality. This is one of those trades where you saw it and you just had to take advantage of it. Unfortunate enough for me is I saw the trades, but because of my transparency and because I like to trade, because I love trading, I know what it can do for people, and I also understand that there's just a lot of information out there. It's just a lot of stuff to go over and look at, and a lot of that stuff you really don't need. You know, moving averages are cool. I use them from time to time. VWAP is awesome. I use it from time to time, but mainly it's support and resistance and watching key areas, understanding price action and volume. Those pieces is what's going to really make you a successful trader. Now, the problem with it is that most people just don't see the chart a certain way or don't plan or plot. It's the reason why you get guys get up at 4 or 5 in the morning plotting lines and plotting areas, because those areas are important. So I want to go over this trade step by step from day one and what people saw the first day versus the second day and the third day and the fourth day and the multi-day move that it ended up doing. And then I want you to see how it respects the lines. As I always say, I use Thinkorswim. I also use Webull, but I like Thinkorswim because it allows you to actually go back in time using the on-demand feature to really take a look at the trade full scope. And this is how you study. This is how you study the charts to get better at them. Now, as I study in the first one about candlesticks, I add a little thing in there about support and resistance. And I want you guys to really look at this and pay attention to the areas. So starting off, this is before the day even started. This stock probably popped up on people's radar later in the day. At this time, I only had about 31,000 in volume. But what happened is that when it did hit the areas, it started to make sense. So when you see a bunch of rejections, especially on a high volume day, you have to look at the areas. So this was an area right here. It went, pop out, and then it respected it, the resistance. So this was support on this side, this was resistance, and it pulled away. Another area will probably be here, which was 339, 340, which is previous month high. So I'm gonna let that one be there where it's supposed to be on that chart. And you can see here it respected, bounce, high volume, and then it faded, came back, respected it as, so it was support on this side, resistance on this side, and pulled right back down to this area. So let's go again further down. This was probably another area here. The reason I say that is because, let's see, we'll call it 550. Again, broke down, popped up, respected. So that was probably a key area as well. Now let's scroll back a little bit more. Now this was probably more of a key area than anything right there. Right there, we'll just call that 840. Now this 840 area, you see how it respected, made a support, bounce, broke down into outer resistance. So it treated as resistance here and then broke down. But this right here is a definitive area. And then you had a lot of volume coming off of the support off this area here. Okay, so let's keep scrolling over. Now we looking at let's see something here. This area here. Now you see that it support, resistance, major resistance, and then a push away. So this is a very key area as well. We're gonna call that 1440. Remember, guys, I like to do whole numbers. This is just easier to see on the chart. All right, so now that we got our areas, now it's time for you to take a look at the chart. So we're gonna call this 260. And remember that 339 is actually previous month high. That's what that orange line means. Next area is 550. All right, so let's go into the day and let's go to the end of that day. So we had some massive volume, 63 million in volume. Let's break down that day. So this is the first day of the move. Okay. So with no volume, we didn't really get volume. So this marked your A. So you always wanted to stretch out first in a motion, making higher highs and higher lows. So as you look at this chart, look at almost like candle elimination. So these two candles here, I'm not really paying attention to. I'm looking at these that actually made the higher highs and higher lows. Then I'm looking at these that made lower highs and lower lows. So this was your A. Okay. So looking at that, it bounced. Now look at the area that it bounced from. 260. So it respected, came back, tested it, respected, tried it again, and then this would have been your entry or area of interest. So what was your risk? I don't know, probably about 10 cents, if that. Yeah, about 10 cents from that area. And then it reached out. Now, notice how it did the same similar pattern. Reached there. Remember, A. This is A. So go back to your area. This was A. Y. Higher highs, higher lows. Then you got your pullback. That was kind of a knee-jerk pullback, but it probably looked a lot cleaner on the 1 minute. So let's go to it. By this time, you ain't got some volume going. People looking at it, so on and so forth. Remember that some people don't take the first move. This is the reason why you always get this. A lot of people want to see it confirmed. This was a key area, a resistance, right around previous month resistance. So you're going to get a big explosion because there's a lot of people in that order there. And then you get the confusion where people get shook out, and then we go a little bit higher, and we get shook out, and then you come back down lower, shook out. And this is how they kind of keep playing you as you plan to stop. But see, when you go to the higher time frames, you don't really look at all that. You kind of just look at the pattern. And then you see that that was A, pull back, support, pull back, pulled up, still higher swing lows, and then it kept going. Now, the interesting part about the trade that I want people to look at is look at how these areas respect each other. Okay, take a look at the fact. Let me remove these drawings here. So that was the first day of the move. So of course, you know, some people saw it, some people didn't, then missed it. So going into after hour, you see that it went to 545, which is very close to 550, and played it as resistance. Now I can get down to the nitty gritty and probably put it at the open price and leave the wicks, but you got to give yourself some room. 5 cent difference is not a big deal. That's pretty much the same thing in my opinion. So now we're going into the next day. Okay, so let me fire this up for 9:30 the next day. So the next day at 9:30, we see that the stock came back and tried to do some action here at that 550. So they went up, grabbed the supply. They pulled it back down. Now, what you want to do when you're looking at charts is look at the areas. So we had a deep pull down here. So what I started to pay attention to is where it started basing. Okay. When it started to base, let's go in about 45. So this is 9:45 a.m. Eastern Standard. Okay. So first thing I noticed is that the stock broke down from the key area. Now this was the key area, 430. Now why was 430 the key area? It's more like 432, but I rounded down to 430. Well, let's take a look at it. There were several things going on at this 430 area. Before it respected as resistance, broke through, a lot of confusion here, and then once it actually held above right here, and it started treating it as support. 433 was the area. So I rounded down to 430 so it can hit more candles. So it actually respected it here. So this was resistance, then support, then it broke away. So you always want to see resistance, support, breakaway. So what happened was that the stock started respecting it here, and then it started acting resistance. Then it got a little confused, and then it broke away. Right? So I was still looking at this 430 area to see what it would do. It was still a key area. Now, if you in the Discord, you would have been lucky enough to actually see that. And let me show you the actual screenshot of it. As you can see right here, this is the first day of the move. In June 7th, you can see, looking at AERC as a potential second day continuous. AERC, Jan, KS. If we get over 4, we good on Jan. In at 361. So when I took that trade and made money on that one. Did a video lesson. Check it out later. Taking some off in the 4s. This is when I got that trade. I think I got it at 411, 412s when I got most of that off. And then I end up missing this trade. Now this time right here is shortly after 9:35. So I was around this time here. What did I say? AERC may have trapped under 430s. It wants to squeeze. So people ask me, why would you say that? Like, how do you know? And so on and so forth. Well, I'm looking at the price action. You had a whole bunch of confusion here and then a whole bunch of confusion there. So later on, when the move actually played, and let me play that for you. I think it was at so we got this 10:10 a.m. loaded. So as you can see, it started to kind of base out here at this 380, 398 area. So let me go and let's see if it was 10. So we're about to load up another 15 minutes or so you guys can kind of see what we were talking about here. Let's see here. All right. So right here is where the trap happened. And let me show you why. Remember, this is our key area. So when it acted as a resistance on this side and support on this side, they came back and respected this higher time frame resistance, then came back and respected the intraday support, and then it came back and then created a new support. Now let's take a look at that area, because we want to make sure we get this correct so you guys can see this. So if you look closely, we'll just call that 390. Now this 390 area was very important. Look back to your left. This is the same area it broke out from. This is the same area that it respected the wrist and everything. So go back here and look at it, and you can see that right here it acted as support. Right here it acted as resistance. Right here it acted as resistance. Broke out, came back, acted as support. Broke down, came back, acted as resistance, then it came support. This was a big area. So this right here, this whole area, basically from here over to about here, was all critical. That was a zone. So when people say, well, yeah, they was consolidating this whole zone. So you had a lot of stuff going on in this same little area. Let me draw it out. So you had both, support, resistance, support, resistance, sorry about that, and then support. So then it actually stepped up there and then took off. So when you see something like that and it dropped down and it's doing the same thing again, and you can see this on higher time frames or the lower time frames, you see again that it's acting as support. It looks like a 5. It should be a S. So right here is support. Now you're looking at it like, okay, that's treating it as resistance. So what's the next move? This is where they got everybody shook. And this is the area that I think that most people messed up on, was right here. This shook out a lot of people. Because a lot of people probably played it here or played it there, because the risk to reward was so good from here to here. It was only 40 cents. Another thing you got to look at is the volume. In that zone, it was a lot of volume. Right here, when it was pulling it down, a lot of volume. When it pulled it down in this area, it didn't have a lot of volume. Pay attention to the volume cues. Volume cues going down was massive. Look how much higher the volume was here compared to here. Meaning that they really wanted to go up. So overall consensus is to go up. Now we had all this volume in pre-market, but then the volume just kind of like didn't ramp up. Just didn't ramp up. It just didn't give it to you. So they played it and ramped it up, but again, the volume's still not there on the downside of the trade. Now sitting here at 11:20 a.m., we had this knee-jerk move down, which shook out the weak longs. But the real support was here. It's the reason why support and resistance lines exist, so you can get in, practically at the low, ride it up, and then add in these positions. Now, some traders like myself, I'm looking at the original support. It's being 430 with the massive volume. So I would have got in here. And this is why you got to use your alerts to make sure you know your areas and so on and so forth, so that you can pay attention to these areas and make wise decisions around them, because that's the areas where the stock is going to pull. Now, the 390 area, man, it was critical. It pulled away, but it slammed into support or resistance. And then once it respected it, it took off, which is when it respected it here on this candle, it took off. Now let's go back down to a 1 minute and you can see it even more. When it came back and respected it 1, 2, 3, 4 minutes, they couldn't bring it down. Volume flipped. So when you looking at trades, you got to think like how they're thinking that's in those positions. Okay, I just came off a downtrend into a support area or demand area. I respected it. I pushed away from that area back into resistance, which is new. Old resistance becomes new support, and vice versa. So support, resistance, because this was support at one point back here, and it was resistance here and broke down. So now it's going back to test this resistance. It broke out of it. When it pulled back, it acted as resistance, and then this is when everybody got greedy. Right there in that candle. 10:54 a.m. Eastern Standard Time is where people's greed jumped in. Massive volume. Lot of range. It's not it's pretty solid. Pullback was weak. Solid pull down, and then it caught itself right there. Igniting candle that started to move. Remember, we just dropped down here, massive volume. So this is the area. 410. Pulled it back. Buyer stepped in, ripped it, came back over 430. And what shorts was thinking was, okay, this is it. This is our time to get this thing back under 430, and we can get this rocking and rolling. Problem was that there was nobody stepping in at this time. Volume started to decrease bar by bar. And then we got a rip. Then you got people scrambling, and then you got a rip. And this is just how the trade goes. Massive volume. Now what I want you to do is take a look at the end of the day. Now, remember, guys, these points were all given to you prior to. So let me go over each point with you. 390 was previous support and resistance area. We kind of went under over. So it was a lot of volume in this area. A lot of people trapped. Pulled right back down into that area. Went back up. Made higher lows. Pull right into the green line. What's the green line? Previous day close. Massive amount of volume in that area. Previous day high. Right in the same area. Massive amount of volume in that area. A lot of people sitting at those prices. Short sitting at that price. A lot of people in any position sitting at that price. Go right up into this blue line, 550. 550 is very, very close to pre-market high, because that's where all the shorts were sitting at to bring it back down to here. They broke through that. As I told people in the Discord, if we get over 550, if we get over pre-market high and hold, this thing can rip. And what did it do? It ripped. Straight 1, 2, 3, 4 bars. So 20 minutes of just straight green price action. going from 563 up to 770. Then we got a slight pullback. What's the pullback for? Pullback is people taking profit. You up $2, $3, $4. You're going to take something off the table. You'd be a fool not to. It found support right there, and then continue on. This right here is where people get anxious. So you had some people get in here at a 530 using 530 as support. Then you had a massive rip up. Then you had this pullback, which made people get anxious, and then they wanted to join the trend. That's when you go back and look at your higher time frames to see or to stay in the move. Never broke a higher low, kept going. The next area was 840. That was off of our daily chart. The lines are constantly respected. Came back, respected, came and kept going. Now this is what we call the first move. I mean, I like playing off of support. So this would have been the first move. This would have been your ad. Then this could have been an ad. And then this would have been an ad. Remember, it's still making higher lows on the 10-minute. Never pulled back. It wasn't until here. But it reached out to this 1440 area. Got to 1423. Pulled back massively. Probably got a lot of people out. And you got to think, it's people that got in way down here that's doing the same thing I'm doing. Buying in the supply zone. Buying in the demand zone. And then ripping it higher. It ripped. It went higher. Got parabolic. Pulled back. Then you get people that jumped in, pulled back. That made people even more greedy. And then shot at the 1525 and shot high over the 1440. Right there. Full move. So you gotta pay attention to the move. Just pay attention to it. Just pay attention to what they're doing. Pay attention to the price action. Pay attention to the higher lows, higher highs. See what the chart is doing. Can't see it. Doesn't look clear on the 1 minute. Move out. 1 minute has a lot of data. Move out to the 5. Can't see it there. Move out to the 10. You can't see it there. Move out to the 15. Can't see it there. Move out to the 30. Keep moving out to higher time frames so you can, till the picture looks clear. And then play off those key areas. Massive rip. Now, let's go to the 8th. The 8th was a sideways play day. There was no real support, resistance, or anything like that. You could have looked at this price here, right across the top right here at 970. So let's look at that. You probably could have played it off the 970s. Me, I probably would have just stuck to the bigger time frame areas. So you have your entry day spots and stuff like that, but I look at everything. Look at everything collectively. You see how I disrespected here, started respecting it here, it built up. So it's treating this area right here, this 970 area, just as it did right here at the 390 area. Now, going into the next couple days, now you can see the area is a little different. Remember that 970 area right here where it was respected and all that when it was going sideways. This is the same area that it gathered and then broke out from. Same area. See how it returned back to the 840 area before going back up to 970, holding, and then keep going. Then it came right back down to the 840 area again. Now let's go down to a 1 minute because it'll look a little bit cleaner. So you had all this confusion there. Dropped back down to the 840s. Went back up. Broke out the 970, which was a pivotal area from where it holds support pre-market and after hours the day before. Broke out. Then it just collapsed. Because there was really nothing there. Probably could have used this 1070 area as it came back and respected a couple times, but really honestly just stick to the areas you know and wait for this price to return. Be patient. It pulled back, returned right back to the 840s. Right there. Pulled up, came back, respected it, and then kept going. Came right back into that 970 area and then played around there. Right? Did it a couple times and then it left this area. It left from this area and went right back up to this area of confusion. I mean, you can just see the confusion. This is the same area. Right there. Did the same thing. It's almost like they flipped the chart or some sort. And then they ripped it back out. So it was trying to get back up to that 1440 area. So this stock gave you a few opportunities. And let's go back to the 5 minute. So if you missed it on the first day, second day was monstrous. The third day, consolidation. Could have played it off the 970. It did go all the way up to 1282 from 970 area. Nice little rip. Came back. They faded it. Came back to the 840s. Could have got in. Pulled. And then it ripped from there. Came back up to the 12s again. Pulled back. They brung it right back down to the 840s again. And then they ripped it right back up to the 12s. And got a little extended over at the 13s. And now they're just sitting with it. Again, playing it off these price areas is where it's critical. It's where it makes sense. You want to play around key areas, support and resistance. What better support to have than off of a higher time frame? Remember, that 840 was from the daily time frame. It came back and respected the area 1, 2, 3, 4, 5 times throughout the day, throughout the whole week, honestly. So there's something to think about when you're placing trades. What's in the area? Where is your resistance? Where is your support? When it was at support, how far did it break away from support? How far is support from the next resistance? This is $1.30 move. Now you could have held, added to your position on any of the dips, and then collected a whole $5 move. But it just depends on your trading strategy and your thoughts and what you're thinking of and how you can hold and what you feel and the volume and all those different things. As you can just see, the volume kind of just faded throughout the week. Wasn't a lot of volume in this stock every day, day after day. It stayed high, but not like the first day. But we had a lot of price action here on this green day. So me looking at this from knowing stocks and stuff like that, yeah, in the green, so on and so forth. The next day, don't get over this 1440 area, we're going to return back down to the 970s. We got to. That's just what the price is looking at. But it did close higher than it has all week. So it started off the week, and the week being the 6th, it started off the week at an open price of 248. It closed for the week at 1250. Nice move for the whole week. This was the move here. Open 248, close it at 1250. Solid move. Solid week. Solid week of trading on that. So again, guys, you might not always catch the first move or even the second, but if you know your support and resistance, you can always, almost always find opportunities throughout the week to play that particular stock, to play that particular move. And it's imperative to draw your lines. It's imperative to know where things are. Why is it doing what it's doing? It's not really a secret. It's just basically, is it respecting or disrespecting support or resistance? And once you know those areas, you wait for the volume, wait for you to see a certain pattern of some sort that you like, and then you actually join that trade. And it's just being patient to allow it to manifest the way you need it to. So guys, I hope that helped you guys out a lot. I had a couple people reach out to me about this particular trade because of what I had put in the Discord as far as pricing. It just wanted to know, how did you know? How did you know that 430 was the area? How did you know it was trapping? How did you know it may squeeze? It just was too much information there not to see it. And one of the things I wanted you to realize is basically look at the news. The news on this was insane with the FDA approval. So with it being an FDA approval, with it being everyone's looking for something to make money off on for those longs, there isn't a lot of picks. This SPY is down. Everything is showing that, hey, it's going to be a lot of people into this trade, a lot of people looking at this. Those were the things that you were supposed to be thinking of as you're going through the transition of that trade. Think about the market sentiment. All those things played a part. All those things is what made this stock move the way it did all week. All right, guys. If you have any questions, comments, click the subscription button so you don't miss anything. Hit the bell so you don't miss any alerts when I bring out new videos. Hit the like button if you learned something from this so that the algo can pick it up and get this information to others. So guys, as I tell everyone in the Discord and any new or old trader, stay studying and stay focused.